COVID-19 pandemic has had an impact on various sectors of the global economy. While the tourism industry is still trying to keep its head above the water, job losses have become another reality during this time. The commercial property sector was also seen to be doing better at some point, but how are things going on the home loans front? Let's talk to Shaun Rademeyer, who's the CEO of MultiNet Home Loans. Shaun, good evening to you and thank you so much for your time. You know, sometimes it really sounds like a rhetorical question when we're asking as to how the industry is doing, especially given the fact that we're in a pandemic. But I can't help to ask you this. Haven't things improved when it comes to the home loan front?
Yeah, absolutely. In actual fact, the home loans industry is one of those industries that spiked during the COVID-19 pandemic. And you would ask why, you know, when people are losing their jobs and people are losing certain portions of their salary, the main reason was because the financing became cheaper. As interest rates dropped, people could start afford properties cheaper than what they were renting. And we saw a very big uptake in the consumer market going out buying properties in South Africa. In actual fact, we are 40% higher than what we were in 2019, just before the pandemic.
And with the adjustment of interest rates, are you thinking that maybe that could have an impact on people just maybe taking a step back now?
Yeah, I think, you know, when you look historically, whenever interest rate goes up, demand for property goes down, and that's mainly because funding for housing becomes more expensive. To give you an example, a household that wanted to buy a property of 1.2 million rand when the interest rates were at 10.25% needed to earn around about 39,000 rand a month. When we dropped to the 3% in the SABC, they only needed to earn 31,000 rand. So a big portion of the market could afford property. And what happened then is demand supplied the supply of property, and prices started to go up in the property sector. So we've seen a high increase in price. We've seen demand increase, but as the interest rates start going up because of inflation, we will see that demand slowly taking a step back.
Let's talk about then some of those that were, you know, affected by some job losses. Others were unfortunately having to take some salary cuts. How much of of requests have you seen when it comes to payment holidays?
Yeah, we had quite, you know, when we speak to our banking partners, we had quite a big number of consumers in the beginning of the pandemic looking for payment holidays, and a lot of them received the 3 months or the 6 month payment holidays that the banks were offering. Most of those consumers are now back on track. We see that the banks are actually very healthy. There are, you know, certain sectors that the customers aren't paying for their debt, but it hasn't been that knee-jerk reaction that we all thought was going to happen. In actual fact, the home loans industry and the financial industry has come out of this pandemic better than what we were before that.
You know, there's always this talk that when you get given something, there might be a catch to it. Let's talk about, you know, the payment holidays, because I remember when a number of people were trying to apply for them, they also said, no, but look at some of the terms and conditions when it comes to such relief packages. What would you say to somebody who has still not been back on their feet tonight, who may want to then, you know, take this particular direction of getting some kind of a holiday? What kind of terms and conditions must they look out for?
Yeah, I think there were two ways that the banks were helping consumers. One was a consumer that's been in his property for quite a while and he built up some equity in the property. So he's paid off quite a portion of his home loan and he had the ability to use some of those funds, which means that you're just paying a longer term. The other options were where they actually take the payment holiday, let's say it was 3 months or 6 months, and they add it to the home loan term. In that case, it's not the best option because the consumer is going to be paying interest on that holiday and essentially taking a longer time to pay off the home loan.
So essentially what you're saying is that read between the lines before you get excited that you are breathing a sigh of relief for 3 or 6 months.
Absolutely. And, you know, the consumers need to understand that we are going through an interest rate hike cycle. We've seen it in November. We have seen that inflation is sitting at about 5.5%, which is above the 4.5% that we want to have the target range. And we will slowly start going back to where we were pandemic stages. The SARB cannot continue to keep the interest rates as low as they can. We have to curb the inflation growth, and that means that consumers are going to be pressurized in terms of financials or paying back the debt.
Some
it also means that...
pardon me, continue. You can finish off your thought.
No, it just means that consumers that are looking to buy a property now need to understand they're going to buy at a high price, but also they're getting the opportunity to get financing. In about a year or two, they might not be able to qualify for a property as the interest rates increase.
And some industry experts have said that the vaccination rollouts are also giving them a glimmer of hope that the economic situation may improve somewhat, and this may see a bit of an improvement even for some of those that were not able to partake in the economy during this time. You share those sentiments?
I do share those sentiments. I do also think that the demand for goods in the world has caused an inflationary requirement. So because there are so many of the things that we used to produce worldwide that is now being scarce, we're paying more for it, as well as with the rand dollar. And if you look at our fuel price, more and more of our items that we are buying is at a higher price. And that is going to cause the interest rates, of course, to go up. So consumers that are now in the market and they have the ability, because the economy is starting to grow a bit and they're actually doing some good work, they should get into the housing market as soon as possible.
Shaun, that was very helpful. Thank you so much for that. That was Shaun Rademeyer. He's the CEO of MultiNet Home Loans.